Good morning, everybody. It is Tuesday, March 15th, 2022, and we have officially rolled over to the June 2022 contract. So if you're out there still sitting back in March, you're going to have to update your charts for this morning. And we're going to go ahead and get started here. We're on completely blank charts now. I had to remove all the major levels that we watched because everything has shifted about 8 to 10 points down. I think so. Where we are right now, current market price is just about 41.88 on the new contract, and on the March contract, it's at 41, just about 96.97. So we're about 9 points higher on the older contract. So I'm gonna have to go back in and update all the major levels and the major zones. And so it'll take a little bit of time. I didn't roll over until this morning, so I didn't really have time to get all the charts remapped and get ready to run the room here at 6 a.m. Pacific. So hopefully by tomorrow we'll have the charts all marked up. So let's go ahead and take a look on the new contract here. We'll go through everything. Remember the high time frames, because the market hasn't appreciably moved out of the range it's been in for 2 or 3 or maybe 2 or 3 months now. Things haven't changed on the higher time frames here. Everything is still inside of the same range it's been in for quite a while. So our quarterly, our monthly, our weekly all basically look exactly the same. The only thing I would say is, and actually let me go back and just see, moving over to this new contract, if anything has changed from a signal perspective. What I'm noticing here is that on the weekly chart, off of the lows that we're printing right now, we are technically getting what could be a bullish divergence off the lows. So we have not broken. Remember the major swing low that was, I believe we were saying 41.0175 down here. That is now 40.9450 on the new contract. So this is the one thing that I don't like about moving into a new contract is I have all the levels memorized in my head. 0175, all-time high up at 0875, all these numbers, and now they've completely shifted and they're brand new. So now the all-time high is 48.01, and this low, which was 0175, is now going to be 40.9450. So again, off of this low compared to where we are right now, we have divergence forming. And remember, the weekly we said was really the first time frame as we dialed down from these higher time frames that gave the first bullish clue with this huge wick and this green bar and all that kind of stuff. So, maybe this is going to be our first high time frame clue that now we're getting a nice clean bullish signal as well. Remember, there's a lot of time for a weekly chart to develop, so we're going to have to come back. Excuse me. We're going to have to come back and revisit this and see how it's changed over the course of this week and then going into next week. Remember what I said for yesterday and when we did our higher time frame review last week. This type of bar here, we talked about what we could expect to happen over here. So coming down, testing that low at 40.9450. Again, either right in front of it, right below it, or making a double bottom here would be what I'd be looking for here if we get the bullish reversal. So if we come down and we do either break through or bounce just in front of or test the level to the tick, and we have a nice bullish divergence down here, we could be getting the start of an attempt to come back and retrace this leg down. So I will be watching that. So that's it for the higher time frames. Let's get into our daily. And if you remember back to yesterday, this line right here, I don't think I had it on the daily chart, but if we go down, remember we looked on the 4-hour and we said we had a little bit of a wedge forming, and we connected the two major lows that we had on the charts, which was the lows from March 8th, March 7th, March 8th, and then this major low back here. Remember that 94.50 low, that was the 41.0175 from the previous March contract there. So if you connect those two up, and then you connect the two major highs that we had on the move down, we have what could be argued as somewhat of a wedge forming. So on the higher time frame, I went ahead and connected those two lows and extended it out. And interestingly enough, it came right down to the low that we made, the low of the COVID correction. So we're going now 2 years ago, the major low on March 20th of 2020. I believe that's March 20th. And you connect it all the way up to the low here on February 24th, again, almost exactly in a year. You do have this nice little trend line. And like I said yesterday, we were seeing what could be a wedge forming. So let's go back up to the daily here. So I just wanted to show you that it's just an interesting observation. I'm not really trying to make any point here, but we do get a nice agreement here with that trend line. So let's go ahead and push in here and look at what's going on the daily chart. Remember that we had a decent bullish divergence from down over here. Again, I'm going to have to update all these charts. I went ahead and completely erased everything off of them on this new contract. So we had that nice bullish divergence there. We had a nice bearish divergence when we made the highs over here. Remember, coming right up into this swing high, or this swing low that we were watching. This was, remember, 44.41 from the previous March contract. That is now 44.31. So it's just about 10 points lower than where it originally was on the March contract. So that is, what's the number again? 44.31 quarter is now that swing low. So again, we came up into that area, pulled back, and looking at things right now, remember the weekly over here, we're starting to see what could be a potential bullish divergence. Oh, look, right off of our 40 line here. On the daily, just seeing here, I don't think we have an agreement just yet. So until the daily starts to line up with the weekly, I would expect we'll continue to play down here. So let's see. Yesterday's candle here, we're still sitting below 50% of yesterday. We have ducked down to come and test the first major low that we talked about. So I believe I said yesterday, if we break the low of the day before, which if you're looking at the chart right now would be this candle right here. Remember yesterday we said we had this major wick to the upside on the daily. More than 50% of the candle was a wick to the upside. We were in the downtrend, and I said if we break the low of the day before, and that happened to be 41.89 on this new contract, if we broke below there, we would probably more than likely continue to come down to test this low over here. So remember, the numbers have changed, but if we broke below now this new number, 41.89, I thought it was a pretty good straight shot down to test the low here at 41.3150. And so far we have come down, and in the overnight session of today's market, we did come down and test. We didn't get down there at the end of yesterday, but it continued to follow through in the overnight, and then we came down and tested, and as you can see, it kind of popped right back up at the moment. But we're still down below 50% of yesterday, so getting through there would be that first thing we'd like to see the bulls do this morning if they can get up through there. I don't see any type of strong signal from a divergence perspective down here, like I said, which kind of tells me we would probably play around until some type of signal does form to kind of come into agreement with the weekly chart. So we'll have to continue to watch that. And as I've been saying for quite a while now, the market has been very, very wonky. So there's not much to say in this area. It's basically all the same levels above us, all the same levels below us, and we're just going to have to see who wins out. So going into the intraday time frames here, give me 1 second. Let's see, going into our 4 hour, Like I said, I removed all markings. We do have a decent bullish signal over here. There was a bearish one just before it, which has been negated. Just trying to see bearish from yesterday's high, from the day before's high. And then we have these two here from yesterday. Just seeing if there's any important signals to mention over in here. Okay, so what can we say for this morning coming into the open here, looking at the 4-hour chart? Well, we're sitting right at 50% of yesterday. You can see where it came up and essentially tagged it, came a little bit shy, and that happens to be about 38% of the whole push down from that major high we got 2 days ago. So this little zone right here, I'm going to go ahead and highlight it somewhere right around the 38 retrace, which is, let's just say 42.05 down to that 41.9850 is going to be an area we'd like to see get break if we're going to have any faith in this continued attempt by the bulls this morning to break out. So I'll be watching that as a potential resistance zone there. You can see there's a major swing low coming in right into the 50% level. So 41.98 itself. So just beware. I could probably draw one of those lines right across, and it's 98 even, so I'll just go ahead and do that. Put 41.98 here. So that is the swing low itself, and we do know how often those can be tested to the tick. So we've got that 98 low up into that 42.0450 38 retrace. That would be the first zone that would make sense to hold, in my opinion. And if they get through there, we're back up into a major chop zone that basically we chopped around for 3 days in. So I'd really not going to want to be playing around up in here. So staying below, again, that area we just mentioned would be ideal here for the bears this morning. We do have a potential bearish divergence forming off the overnight high. If we get through that area we talked about, this little chunk between the 38% and the 61.8% retracement area looks like a hands-off kind of part of the chart for me. So if we stay below it, I'd like to be short. If we get through, I don't know if I want to be trading in here. Maybe I'd like to hold a long position to see if we could break through and continue going higher. But I'm still very skeptical on the upside here. Just like yesterday, I said I'm more than likely, I think we're probably going to, as long as we can break the low of the day before, I think we're coming lower. This morning, nothing has really changed. There's nothing that has come in from a pattern or a price action perspective that tells me I could expect some type of major reversal or a rotation here for some type of huge bullish push. So I'm still fairly skeptical of that happening. But again, if we do get through all this stuff between the 38 and the 61, then maybe if we can pop up through the previous daily high, maybe that will give me a little bit more faith that we could come up and maybe test this trend line high and get through the high of 2 days ago. And even if we do get through all of that, just remember there's a whole bunch of stuff we're going to be contending with up top here. So even if it gets through the highs from 2 days ago, we have to then come up and test these highs from the beginning of March, right around 44.10. So that would be another zone if we end up getting through the high from 2 days ago, basically the high of Friday of last week. We have to come up and test the highs from the week before. Think that's it for the way up, and we'll go down to the 60-minute and see if there's anything else I can eke out of the chart there. But otherwise, we'll have to look and see what we're dealing with below. One kind of interesting thing I want to point out is we drew this potential wedge formation yesterday, and the low of the day from yesterday was basically the trend line low. It came down to 41.52 quarter, and the trend line was sitting basically here at 54 quarter. So breached through it by 2 points, came back up, pulled back, held it to the tick, and then pushed above into the Globex session. So probably just coincidence there, but just kind of an interesting observation. So again, looking a little bit more detail on the 60-minute chart here, we're still dealing with, and I want to go ahead and copy both of these things over. So let me just copy these over, and we'll try to wrap this up as quick as possible because getting closer to the open now. What the frig? And I'll copy over the retracement scheme here. So down on the 60, same deal. You can see the major wick here at 98. There is even another one right here at 4200 even, right in that shaded zone. So that's going to be the expected resistance. What I couldn't see up on a 4-hour chart is that we have a really nice swing low here as well. And actually, what I want to do is just copy this, bring it right up to that swing low. And that swing low there is 42.2350. So be aware of these swings that I mentioned, because a lot of times we see the market push right into them. So there's going to be that little shaded zone right there being the 50% and the next major swing lows right here. So we've got 28 down to, what did I say, 2350. So a little 5-point range there. And then, like I said, any further than that, we're going right up into the 61 and the previous daily high. If we can get through there, might have some faith for that push higher. Now, on the flip side of things, and like I said, up in this area, probably not the most ideal area to be trading in. So on the way down, what are we dealing with here? If the bulls cannot hold things up above the low that we made in the overnight session, which does actually have, and let me just see, we do have a good bullish divergence from the overnight low. So I don't want you to ignore that. If that holds, if that can't hold, I'm sorry, then we're looking at a test of this low from a few weeks ago that we've been watching. Remember, it was 41.0175 on the old contract, on the March contract. On the June, it happens to be 40.9450. So if this low doesn't hold at 41.26, 41.27 area, I think it's a clean shot right to 40.94. So that's a good 20, 25, 30 point push down to test the lows from 2 or 3 weeks ago. So that would be my target to the downside if we can't hold the overnight low. And what we can do real quickly here, because we're getting close to the open, we can go down and take a look. We've got the prediction points on here, so at least we have those on the new contract. And so if we get down through the overnight low, which again has a great confluence of bullish signals right now, we have 40.94, which you can't see really marked on here, but we've got 40.94. There are some things in between. So on the pullback here, and I'm trying to be quick as possible because we're getting real close to the open. On the pullback here, we do have some little levels in between. What I'm really kind of focusing on is basically this, it's a bigger range, but basically this swing high, which is 56.50, which is the KP, right into our orange line here. So in the most immediate area on the pullback, this would be a zone that I'd be looking at. So potential hold up in that area. Potential hold right here by the 38, where we have a major swing high at 69, 69.50 here. And then outside of those two areas, we do have the VWAP and the 50% retrace right in between. I feel like if I don't mention this, this will be the level that they'll come down and push into and bounce out of, and it'll be the one that I didn't mention. So at least we have these three general areas that I would expect there to be a bounce from. And if there's no bounce, we're right down. And like I said, I wanted to see if there were any levels in between here and 40.94. And so it looks like if we get short for this push to 94, there might be some areas that we want to take profit in front of, which would be the prediction points in case the market comes in and holds off of them. So that's what we have coming into the open. I wish I had a few more minutes to go over some other levels, but we don't have the time. The market's going to open in like 5 seconds. So have a great day. We'll be back tomorrow as usual.